Hello guys, this is your boy Ali Solanki and today we'll be talking about what are dividends. Now this video is gonna be quite different because I've not written a well jotted down script for it, and rather I'll be just expanding on the points as they come up. Also, if you haven't watched my previous videos about trading versus investing or how I started on with the stock market and how I earned money through it during a recession like this, then do check those videos out. I've also placed my whole investment portfolio right in front of you in those videos, so do check that out if you're a beginner. Today is the 6th of July and it's the ITC's ex-dividend date. Now, in the stock market, you have various ways to earn money. But we are only familiarized with one method, and that is buying the stock at a lower price and later selling it at a higher price. Now, this is just one of the methods of earning through the stock market. There are various different methods as well. One of them is dividends. Now, let's talk about dividends first. What is dividend exactly? The textbook definition of dividends is a dividend is basically a payment to the shareholders by the company from its earnings. Basically, you earn money for holding a particular stock and not selling it further on. These payments are made directly through cash or sometimes even directly transferred to your bank accounts. It's a way of the company to actually say thank you to its investors. So let's talk about the process of earning your own dividends and how much can you earn from it really. You do not have to do anything rather than just buy the stocks of the company you want dividends from. Now, you must also own that company's stocks on the record date, and you must have purchased those stocks after the ex-dividend date. Don't worry, I will explain you all of these dates in detail. So, the first date that comes up is the announcement date or the declaration date. Now, this is nothing but the approval of a dividend by the company's board of directors, and they sit down and select the dividend's size and the record date as well. So after this, the next important date is the ex-dividend date. Now, this date is marked by the stock exchange itself and is usually around 3 days before the record date. This date essentially removes all the new traders that have just invested in the company's stocks, because the people who buy the company stocks on or after the ex-dividend date are not eligible for that dividend. The next important date is record date. Now you have to look out for this date particularly, because anyone who owns the stocks on the record date will be given a dividend, provided that they have purchased those stocks after the ex-dividend date. Now the last date is the payment date, and this is where all the dividends are paid out. Now remember, you do not need to hold the stock for a very long time. Rather, you can also own it for just 4 days or 5 days and earn the dividends. This is because you can start buying those stocks just before the ex-dividend date, and after the record date you can sell those stocks and receive your dividends. However, this is not advisable at all, because the stock prices of the companies do adjust themselves according to the dividends that are paid out. So basically, if a dividend of 5 rupees per stock is being paid out, then the stock price will drop by 5 rupees and you will not gain any benefits out of it unless you have invested for the long term. Now let's take some examples. Let's take ITC for example. Today is the 6th of July and it's the ITC's ex-dividend date. This essentially means that any new traders that buy into ITC stocks today or from today will not be entitled for this time's dividends. So as you can see, ITC's announcement date was on 26th of June. It means that ITC's board of directors sat down and decided onto a dividend size that they will give on this date. Now remember, dividends and interest are quite different. In interest, the interest is fixed. However, in dividends, the dividends change every year. It's on the company to even give out dividends, or they can just cancel the dividends fully. So dividends are not something that the company is obliged to pay you. Rather, think of it as a thank you card with money in it. So if a company decides on paying, let's say, a 5 rupee per stock dividend, what it essentially means is that for every stock that you own, you will get 5 rupees in return for it, for just holding on to that stock. Now let's look over here. I own 30 ITC stocks and they have declared a dividend of about 10.15 rupees per stock, which amounts to a dividend yield of around 4.89%. What this essentially means is that for every 100 rupees that I invested in the company, I will get back 4.89 rupees back as a dividend. So I will get around 300 rupees, that is 10 rupees per stock, and I've got 30 stocks, so 300 rupees minus the tax that I would have to pay on it. Now dividends are usually tax free. However, just recently they have kept the tax bracket to around 7.5%, I guess, but it really does not make a much of a difference. So how much dividend does a company pay? Now this differs from company to company. As you've already seen, ITC paid out its dividend at 10.15 rupees this year, and at its current value it's a dividend yield of around 4.89%, which is calculated by 10 divided by the current stock market price, which is actually quite good. Companies usually pay a dividend of around 2 to 3%. This is one of the biggest dividends that ITC has paid till date. So, how to choose good dividend paying companies? Now, think about it. Why would a company pay out its dividends? Why would a company think of removing a chunk of its earnings and pay it out to its investors? Now, companies in their early stages do not usually pay out dividends and rather use that chunk of money in growing themselves bigger. However, once a company has seen a lot of growth and is now quite stable, its stock prices also show a stable price. Now, to make people invest in their company, they need to offer the stakeholders something in return, and they give out dividends. That is why you won't see much of a volatility in some of the top dividend paying companies, and their stocks would be quite stable. So the first step in choosing a good dividend paying company is go for a company which is quite well established and has its stock price quite stable. Also check if the company is paying out regular dividends or not, because sometimes the companies might decide to not pay out dividends at all. So remember, only choose those companies as your dividend paying companies which pay out regular dividends and which have their dividends in an increasing fashion and not decreasing. So how do you check out if they are actually regular dividend paying companies or not? So for that, let's go over to my computer screen. So what I do is I first get the top nifty companies and start searching for their dividend yield over the past year. I compare them and get the full data about which are some of the top dividend paying companies. I also look at their dividend history. This is very important, and always check to see if the dividend has increased over time or not. After this, I look at how their stock is performing. If they have a good stable stock price, then only I invest in it. And this is exactly how I chose ITC as my dividend paying stock. You can do your own research, note down the dividend yields of the companies that you want to invest in, and see if their stock price has been stable or not. Also, if you have any queries or any questions about the stock market or anything in general, also do message me on Instagram. I will leave a link down in the description box below or pin it to my top comment or something. So just check it out and message me on Instagram if you can. So that's it for the video, and please subscribe to my channel, like this video, and share this video with all your friends and family members. Peace out. Also, if you're a millennial or someone who likes self-help channels or self-growth channels, then do check out my channel as it has a lot of videos about it.